Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Tuesday, August 8th. We are on the second day of the trading week, and DXY, interestingly enough, jumped higher into the evening during the Asia session yesterday, but is getting capped at that same level of resistance that it was getting capped at late last week. And we're seeing a nice little bounce from crypto, and equities are holding their recent lows. And I have a feeling it's because DXY is unable to break above this 102.8 level. If it can, obviously we'll look to this 103.5, 103.6 level. But as long as it stays capped right here, it seems like risk assets are enjoying that type of experience. So if we end up capped right here and we drop back down, we'll look for the 102 level. If this holds, then we may look for a similar reaction, meaning risk may pull back if we bounce here again. And then, if we ping pong here, then risk is getting the benefit up here, risk is getting the detriment down here. So very much something to monitor. So we'll see, if we cannot hold any of the positivity from today's session tomorrow and DXY ends up heading higher, then that will know why. But if this ends up heading lower and we continue, then we have a pretty good, we know our gauge is still working. So looking at equities, interestingly enough, we dropped lower. So this is about where we closed yesterday, right here, up here, 45.40. And then we dropped all the way lower last night. Remember, DXY jumped higher last night. And then we ended up at the 44.80 level, which we've had drawn out for quite some time, which coincides with the low of this range back here. So, what you would expect, for, and considering, what we told the TTC community is if it can get above 45.11, obviously it'll head higher. If it stays below, I think the 4,500 level, then it's going to tag this level. And that's obviously what it did shortly after the open. So now that it's tagged this level, either it breaks this level or holds this and then tries to recapture 4,500 and then move higher. So it obviously tried to recapture 4,500. Still plenty of time left. But as long as it holds these lows, there's still a chance for it to head higher. And looking at the 4-hour, we talked about this yesterday. It needs to basically reclaim this 4-hour estimated 200 moving average to keep the bull trend intact. Remember, it's dropped below, several times, but it's always reclaimed and then obviously went on to make higher highs. So if it can reclaim this level, which is right around the 4,500 level, which we mentioned being very important on the 1-hour, then it will, then it has a fantastic chance to then move higher towards 45.40. And then possibly up to this high at 45.60 before, reclaiming that and moving higher. So if it can basically reclaim 4,500, it'll have a really good chance to grab the liquidity up here. And then obviously that's where you would expect an acceptance or then rejection back lower. So I do think that, a lot of the bulls will definitely try to come in and defend this level. But obviously if we do get rejected at the 4,500 level again, then it's going to cause issues. And right now we've obviously got this wick up here. So we need to break that level and head higher. If we reject, we'll look for shorts, except you look for longs. So looking at Bitcoin, really good price action today. I will admit, we were short in the TTC community after the initial rejection up here at the 29.6 level. We stepped out, after we seeing some strength at the 29.6 level. And then we entered Ethereum just recently on that boost and recovered all of the losses and then some. So good trading day so far. Wish it was more perfect, but this is sometimes it's what you play. You get this sharp rejection, you play the shorts, it reclaims, then you flip long. So the moral of the story for where we're at right now is so let me get my bearings straight here. Is we've got we mentioned yesterday on the Trading Rebellion show, we've got the liquidity down here. We got the liquidity up here. So, it doesn't need to tag this liquidity. And obviously we know that 29.7, 29.8 is resistance. So if it gets rejected here, it'll definitely climb back to the 29.5 level. And then, potentially it could bounce and move higher, or obviously, accept and move lower. And then if it reclaims this 29.8 level, we would expect, a bounce up to this liquidity up here. And then if it fails at this liquidity, it'll obviously drop back and grab this level here before, moving lower if it accepts, moving lower if it accepts. Or obviously if it holds this level, then it'll bounce back to this liquidity and then move higher. So let me get rid of some of these lines. I'll draw them fresh. All these lines are still valid because it's basically level to level trading, but accept above this level, move higher, right? Get rejected at this level, move back to this level. Accept above this level, move up to 30.4. Fail, if we fail here instead of accepting, then we'll move back to 29.5. And then if we hold 29.5, we'll move back up and then either accept or reject. And then if we, if we can't hold 29.5, then we'll move back down to 29.2. And so that's just basically level to level trading. So as you can see here, we already have this wick that's forming above this level. So we did see some selling immediately right here. So if that selling holds and we can't break above the 29.8 level, then we are going to drop back here. But if we can reclaim and get above this level and hold for the next hour, then we'll probably end up likely moving to this 30K level that we were at last Tuesday. Today is Tuesday. Tuesdays are typically green days. So today is no different. But remember what happened last Tuesday is there was absolutely no follow through. And then we immediately just dropped back down. So in my opinion, I am currently long ETH, but thinking about, grabbing some, some hedges, but I'm not entirely convinced that you need to grab a hedge yet. The reason we were grabbing hedges last week is because look how ugly these hourly wicks were. Even though this isn't, exactly what I want to see, it certainly doesn't look to be the caliber of this yet. So if again, very similar to Bitcoin, we are seeing some selling at this level, which we recognize as being resistant. So if we can break above this level, 1860, then we'll end up grabbing this liquidity, same kind of level for BTC from the Tuesday level. And then if we get rejected off this level, then we'll end up, going back to this level or accepting and moving higher, right? So as we can see here, ETH is obviously seeing some buyback action, not exactly seeing the weakness right now that I saw on Tuesday, but we're monitoring for it. So so I'm looking for basically a repeat of something like this to then hop into shorts, but I don't think, now is the immediate time to do it. Definitely showing a little bit of weakness here, but still plenty of time in this next hourly. And I've not seen any rejection similar to this. So again, if you can reclaim 1860, you will definitely move up to this liquidity up here at 1880. If you fail at 1880, you will move back to 1860. If you accept above 1880, let's move this. If you accept above 1880, then you have free reign to move up to 1900. So that's level to level trading, right? And then if we never get above 1860, if we get capped where we currently are, we will move back down to about the 1840 level and then either hold that level and move back higher or fail at that level and move back down to the 1830 level. So there's no need to overcomplicate this because you're basically getting a repeat of, last Monday's price action and last Tuesday's price action. Last Monday was a dump. It held, we zoomed higher on Tuesday, and then we immediately sold off on Tuesday. There was no hold here, and then we ended up just moving lower. So if we get this similar price action, then we'll just end up moving back lower, and then we have another decision zone here, and then we could end up, just continuing to move lower from that point. So there's no need to overcomplicate this trading, and I know some people don't exactly, aren't super fond of the way that I trade, but this is how I place trades and make capital on the charts. So, right here is where you would probably think about hedging. It's still very early and I haven't, seen a strong rejection yet. This could obviously get bought back. But if we end up, closing with tweezers like this, and maybe we drip back beneath this wick right here and we close below that, maybe I'll start to think of some hedges on my ETH shorts. Because, that's just a smart thing to do, but there is no evidence of it yet. So we still have, at least, I would say at least another hour, maybe two, to really understand how this rejection is going to look. And another thing that I think is interesting is, then this isn't exactly something that I'm immediately trading off of, but OI is the same level as it was the day that the Ripple ruling came in. And after that Ripple ruling came in, we had an immediate sell-off, very similar to what we had last week. So it is something to keep in mind that this is probably where a lot of shorts would like to come in after this big of a boost. So that's why I'm thinking about hedges, but I haven't seen anything yet. The early, I will say, now that the more we're watching, but we're only 4 minutes into the hourly. So, so the why I would want to add a hedge, we're starting to form tweezers, but we're only 4 or 5 minutes into the hourly. And we haven't seen, I haven't seen, evidence of a rejection yet on the time frame that I want. Now, something like closing like that, closing down here and beneath this wick right here, definitely something that I want to add hedges for. But we're still playing it level to level. So an overzealous trader would start to add hedges or shorts at 1860. A patient trader will wait to see if there's another drive into that 1860 level to then reclaim or reject. And I think I'm going to be more patient because I'm in longs. I took some profit, told the TTC community, got all of that. They know when I entered, they know when I took the 25%. I actually took two 25% profits. So I pulled out half my money out of the trade already. And so that's what I'll be looking for. And if I miss it, then, maybe I just, I close out of my trades even because I already took half my money off. Or we see if 1840 has a strong bounce and then we add more shorts there. So the fact that we're in early means that we can be patient. We can think about either compounding. We can think about adding hedges. We don't have to do anything right now. We know exactly what levels we want to do what, and then we'll see what the reactions are as we get there. So right now, definitely looks like it may, be a little bit weak, but I don't think that, it's certainly not looking anything like this, and it's certainly not looking anything like that yet. So there's no reason to get overexcited and start jumping into things that go against your trade. And, as you can see with Bitcoin, although it did reject off, starting to form that kind of Darth Maul wick, and there's no indication. So right now, just based on the surface, it likely heads higher, but we'll know if it has another drive up above 29.8 and then fails, that'll be a good short opportunity. And the same goes for ETH with 1860. If we have another drive up and it fails, good short opportunity. Right now, you can just be patient. So equities are, I think, a little bit more precarious, but, the simplicity of this is reclaim, 4,500, a lot of good things happen. Reject off of 4,500 and stay below, bad things happen. So I think you can, again, be patient. I'm not expecting equities to just drop out of the night sky yet. We'll probably end up hanging around 4,500 again into this evening or into tomorrow. You could probably get a good decision, but I would definitely mark an alert. If it goes above 4,500, good for longs. If you notice that by tomorrow it's still under 4,500, probably start thinking about shorts. And then, the master kind of key for this is DXY. This heads lower. Equities and crypto probably looking good. If this ends up holding this 102.4, 102.5 level into tomorrow and moving higher, then we may have another bearish day, for risk, very similar to what we saw for Bitcoin and Ethereum. Remember, spike up and then we just dribbled back down. So always something to keep in mind here, but I would be shocked if the market just completely repeated itself 2 weeks in a row. I mean, actually, it probably shouldn't shock me. We've all been trading crypto long enough, but it seems almost too easy, right? So better to be patient than take the too easy trade. But it's tough to think that we just start zooming above 30K and we start zooming above 1880 without any sort of real catalyst. So that's also something to consider. So, and again, we do have CPI on Thursday, but, there's really nothing for tomorrow. And CPI is expected to increase. So take that for what you will. That's typically not a bullish situation. And if we rise into that number, I would expect us to probably end up selling off on that news. So that's also something to consider. But I think over the next 24 hours, maybe your longs are safe. I wouldn't get too overzealous, but we're going to hang out in these longs and be patient. But I will admit to you right now, I will be looking for hedges if we get another drive up and it fails. That is my trigger. And then if we also, the easiest trigger, I think the most ideal trigger is something like sweeping 30 and we get just above it and then we immediately start selling off. That I'm entering a short, because that's a nice sweep. We get similar price action to exactly what we saw here. And then I'm out of, and then I'm hedged. And the best part about being hedged is you're still in the longs. Maybe you close a little bit to lock in some profit, and then you have those shorts. So you're kind of break even, and you're just paying insurance on crazy directionality. So if it keeps dropping and there's a lack of strength, you close your shorts, you close your longs, you ride your shorts. And then if it keeps going and your hedge is starting to fail, you just close break even and you keep your longs and you're still riding. So you're basically paying a temporary insurance to not really make any money or make less money for a small period of time, but you give yourself the optionality and the ability and the lack of stress to make sure that you can take care of either side depending on what the opportunity gives you. So that's the best way I like to trade. And we are still currently in Ethereum shorts. We were in Ethereum shorts from 1846. I'm sorry. We were in Ethereum longs from 1846. Ethereum longs, we're not in shorts. We're in Ethereum longs from 1846, and we would like to continue to hold them for as long as we can. So with that being said, good luck, happy trading. See everybody tomorrow.